thought I would put a little segment here about analyzing or kind of market procrastinating going forward. We're trying to figure out where this market is going to go. And coming into 2023, most of us, including myself, thought it would be a tough go at the start of the year. We thought that until interest rates stopped going higher in the US, the market would be in tough. And that just wasn't the case. And in fact, I found myself alongside with many other investors buying into the market right away, buying the stuff that was hit the hardest last year. And that was primarily, as we've said in this past segment, technology stocks. So you have an S&P 500 chart here that will show you. You can clearly see that coming into this year, we came in on a low point. If you look at, October of last year, it was the bottom. But even December coming into January, we hit a bit of a lull there as well. And then the market has really shot higher for the month of January and into February. And so all those that thought, well, I'd sit in cash a little longer, or maybe, buy those short-term government treasury bills making 4 or 5%. I'd sit in those for a little longer. You missed out on significant growth to start the year. So that got me thinking, what do I see for the rest of the year? Well, the start to the year was great, but I think we're going to see a bit of a lull. And we have seen that already. You can already see in the past couple of months, the market is flatlined. And I think that flat line should be the expectation for the next quarter or so. And the reason for that is we're seeing a slowdown in the economy. It's very difficult for businesses to make money if there's a slowdown in the economy. If people aren't spending as much, which we know they're not, if businesses aren't producing as much or not growing as much, that's going to be reflective on the stock price. So I think what you're going to see during the course of this year, we've already seen the uptrend. I think we're going to see a bit of a flat line middle of the year. But I do believe we're going to see an uptrend towards the end of the year. Once businesses, big and small, can wrap their head around these higher interest rates, can right-size their business to whatever it takes to cope with higher expenses, higher inflation, higher costs in general, I think businesses in the back half of this year will excel. And I think we could see this market, as I said, the S&P 500 up 7.5%, Toronto market up about 4%. I think you could see the S&P 500 up 10 to 15%, the largest index in the US. I think you could see the TSX up 8 to 10% by the end of the year. So I still think there's a lot of growth to come based on this idea that we'll see a flat line in the middle. We've already seen an uptrend to start, flat line in the middle. And I think we'll see an uptrend to end the year based on this idea that businesses will begin to figure out or learn to cope with higher interest rates.